In the vast realm of finance, there exists a juggernaut, a titan that stands unrivaled. BlackRock. This financial colossus with assets nearing $1 trillion has emerged as the unseen hand shaping markets and economies worldwide. Its influence extends beyond numbers on balance sheets. It's a force that dances between spotlight and shadows. BlackRock is more than an institution. It's a strategic player, a leader, and a partner to governments, institutions, and investors globally. Join us as we unravel the tale of this financial overlord, a story of complexity, contradiction, and constant evolution. Welcome to the Dominion, where BlackRock owns everything. Welcome to the Opulent. Subscribe and let's dive in. Picture this, a colossal corporation, the unseen empire, standing as both hero and villain, with beginnings rooted in a modest New York City room in 1988. Larry Fink, the visionary leader, and his audacious team of 8 embarked on a journey that would birth the financial powerhouse we know today, BlackRock. Their saga begins with humble origins, armed with a mere $5 million bank loan and a shared dream of redefining asset management. The financial landscape of the late 80s, scarred by the savings and loan crisis, provided the perfect backdrop for BlackRock's innovative approach rooted in risk management. Larry Fink's journey, marked by resilience and determination, began with a setback at First Boston in 1986. A $100 million loss due to an incorrect interest rate prediction became the catalyst for Fink's vision of incorporating rigorous risk assessment into investment strategies. This vision materialized in Aladdin, a cutting-edge technology that became BlackRock's cornerstone. By 1991, BlackRock's assets under management had soared to $9 billion, a testament to their innovative strategies and client-focused approach. The 90s marked a meteoric rise, with AUM reaching $53 billion in 1994. The FDIC recognized BlackRock's potential and entrusted them with overseeing assets of savings and loan institutions. Larry Fink's foresight became evident in 1995 when PNC Financial Services Group acquired a stake in BlackRock for $240 million. This strategic partnership allowed BlackRock to seamlessly blend institutional roots with a stream of retail clients. The late 90s posed challenges, notably the bankruptcy of Peabody. BlackRock's resilience shone as they navigated the liquidation of a $77 billion mortgage-backed securities portfolio. In 1999, BlackRock went public, marking a turning point with assets surging to $65 billion. The new millennium ushered in expansion and innovation. In 2000, BlackRock unveiled BlackRock Solutions, an analytics and risk management division, showcasing their commitment to staying at the forefront of technological advancements. The pivotal moment came in 2009 when BlackRock became the world's largest asset manager, boasting a $1.31 trillion in AUM. Strategic acquisitions followed, solidifying BlackRock's position as an industry leader. The acquisition of State Street Research and Management's holding company and the merger with Merrill's investment manager division expanded their client base and brought new talent. BlackRock's influence extended to responsible investing, pioneering environmental, social, and corporate governance issues. Today, with over $8.59 trillion in AUM as of December 2022, BlackRock stands as a giant in finance. Amidst the 2008 financial crisis, a parallel narrative unfolded. Barclays, a venerable British bank, found itself at a crossroad. In a masterstroke, Barclays sold its global investors unit, including iShares, to BlackRock for $13.5 billion in 2010. This wasn't just an exchange of assets, it was a pivotal moment that unleashed the power of exchange-traded funds. iShares, a game-changer in ETFs, became BlackRock's gem, offering investors a revolutionary way to access a basket of investments in a single tradable unit. ETFs, with their low costs and ability to track specific indices, quickly captured investors' imaginations, and BlackRock became a powerhouse in the ETF landscape. BlackRock's colossal fortune positioned them as the ultimate conductor of a financial symphony, serving a spectrum of clients globally. Their value proposition extended across equities, fixed income, options, and more, crafting financial melodies that resonated across the world. In the face of the COVID-19 pandemic, BlackRock's role expanded. The Federal Reserve turned them to manage crucial corporation bond buying programs, injecting stability into a shaken market. BlackRock's expertise became paramount in ensuring the functioning of corporate bond markets, showcasing their ability to provide stability during crisis. Access to China's financial markets further solidified BlackRock's global reach. They became the first global asset manager approved by the China Securities Regulatory Commission, demonstrating their capacity to navigate regulatory complexities and establish a significant presence in a major global economy. In a world of increasing globalization, BlackRock's influence reached beyond geographical boundaries to encompass diverse investment strategies. Their approach to India and China showcased adaptability and the ability to seize emerging opportunities. Picture this, a grand theater where each company is a performer. and the shares they issue are the notes of a symphony. BlackRock's extensive portfolio spread across these companies comprises a powerful chorus of financial influence that reverberates through the intricate movements of global markets. As the clock ticks, BlackRock engages in a dance of investment strategies, deftly adjusting its moves based on market dynamics. A recent performance saw the company lowering its investment in India while simultaneously increasing its focus on China, a calculated move showcasing BlackRock's ability to pivot and adapt. This dance isn't merely about financial transactions, it's a reflection of BlackRock's deep understanding of global trends and its commitment to maximizing returns for its clients. But BlackRock isn't just a participant in the global financial arena, it's a leader, strategist, and partner to governments, institutions, and investors worldwide. Ralph Schlosstein, one of BlackRock's founders, aptly coined the term the most influential financial institution in the world in 2010. With assets nearing $1 trillion, BlackRock commands attention and respect across the global financial landscape. Yet with great power comes great scrutiny. In 2020, US representatives proposed a bill to rein in BlackRock and other shadow banks, raising questions about the extent of its influence and potential risks. Some even suggested that BlackRock's scale warranted the designation of being too big to fail, reserved for institutions with the potential to cause systematic disruptions. Beyond spreadsheets and balance sheets, BlackRock's influence extends to its role as a major shareholder in numerous publicly traded companies. Its vast holdings have led to its recognition as one of the top shareholders in some of the world's largest corporations. However, this concentration of its ownership raises concerns about anti-competitive practices and the potential impact on healthy competition. BlackRock faces accusations of exercising shareholders' votes on behalf of its clients without involving them in the decision-making process. While BlackRock insists that the interests of its clients guide its decisions, questions about transparency and the balance between market influence and fiduciary duty persist. The dance of ownership with BlackRock as the lead dancer is a dynamic interplay between financial power and market influence. However, this giant isn't without controversies. One significant note in this symphony is BlackRock's investments in contributions to climate change, with substantial holdings in coal-fired power stations and fossil fuel reserves. BlackRock has faced heated criticism for its role in environmental degradation. To its credit, BlackRock has made efforts to pivot towards environmental sustainability, vowing to divest from coal-related assets. However, critics argue that these moves might be insufficient, pointing to a declining support for climate risk disclosure resolutions as evidence of a lack of commitment. In response to environmental concerns, BlackRock ventured into environmental, social, and corporate governance investing. This marked a departure from the conventional focus solely on financial returns. BlackRock's proactive approach sought to promote sustainable practices, hold companies accountable for their environmental impact, and champion diversity on corporate boards. Yet BlackRock's stance on ESG investing is a complex dance between progress and public perception. Former insiders have labeled it as a dangerous placebo, while founder Larry Fink asserts that ESG is about conscientious capitalism. The evolving relationship with ESG showcases BlackRock's ongoing balancing act between genuine progress and public perception. BlackRock's global ambitions have led it to countries like China, where it became the first foreign-owned company allowed to operate a wholly owned business in the mutual fund industry. While this venture signals new opportunities, it also raises questions about BlackRock's motivation and its roles in international power dynamics. The company's ties to governments and political figures have triggered debates about its involvement in national affairs. Allegations of cashing in on reconstruction efforts in Ukraine and accusations of cozy relationships with central banks fuel speculation about BlackRock's broader influence beyond finance. Thank you for watching. Follow for more.